Hello, everyone. Welcome to another edition of The Right Way to HSA. I'm, of course, joined by my wonderful teammate, Niraj, and I'm going to let him take a moment to introduce himself.
Hi, thank you, Mimi. Glad to be here. Hello, everyone. My name is Neeraj, founder and CEO of Savings Oak, the HSA administrator for small and mid-sized businesses.
So our topic today is going to be dependents. We're going to talk about who is really covered under your HSA. And just a quick note, Savings Oak does not provide tax or financial advice. And as always, please consult your qualified tax consultant or certified financial planner. So with that, let's get into the questions. So Niraj, let me ask you, so who is covered under your HSA?
Yeah, that's an excellent question. I mean, in addition to so many different amazing things that an HSA provides for people, it's always kind of like who really is covered under my or somebody else's plan. So, of course, you are covered yourself, your spouse, from a standpoint of irrespective of whether you file taxes separately or jointly, your spouse is covered under HSA. Any dependents as qualified under the from a taxation standpoint, your relatives, your kids, or your relatives that you claim on your tax filing, or any other person that you claim as a dependent on your tax filing is actually covered under your health savings account.
Okay, really good to know. So now, there's like some special circumstances though, right? So let's talk about that. So some special cases that people should be aware of.
Yeah, no, that's an excellent point, and this is where why we do this session around demystifying HSAs to make sure that people have a better idea of how how some of these things actually work, and more importantly, taking away all the nuances that are out there and kind of bringing that information out for folks. So let's talk about the special circumstances for coverage from an HSA standpoint. So, first, let's talk about adult children. So, even though the children up to 26 are covered by insurance, but from a taxation standpoint, they are not. They do not qualify as tax dependent, and therefore not covered by your specific HSA. An adult child, though, can actually open their own HSA and begin contributing. And there are also some possibilities where you can actually gift some money into other people's HSA. So you, as a parent, could think about donating certain money into your adult kids' HSA. There are regulations around it. Special circumstances is something that can be done. The next notion is around domestic partners. From a federal taxation standpoint, domestic partners are not considered spouses, and therefore domestic partners, while they can go ahead and open their own HSA for medical expenses, they are not they're not covered under your HSA, so to speak. And the last category from a special circumstances standpoint here is children of divorced parents. In some cases, both parents can claim the kids as dependents from a for covering their qualified medical expenses and pay for those expenses. The parents can use their HSA funds as well, but something to keep in mind is that the if the child needs to be in the custody of the parent for more than half of the year, again, some of the taxation rules that apply otherwise come to picture here as well, is from a coverage standpoint. So you can cover somebody, and again, this is not tax advice. Please consult your CPA for that. But those kind of rules come into picture where who you actually file as a tax dependent person on your return can actually determines who's actually covered under HSA.
Yeah, all really good points and good to know, especially the special circumstances, and if you have, questions about that, definitely like talk to your tax consultant or financial planner. So.
Yeah, great point. And one last bit that I would like to add, because we are April 13th, and the last week's session that we did on taxes, since we're talking about taxes here again. I got a lot of people pinging me back through DMs and one-on-one messages about, hey, the HSA coverage is typically only until April 15th. Why did you mention April 18th? So we posted about this yesterday as well. IRS actually also clarified this. For this year, typically, the last day to contribute for a previous year's HSA is April 15th and not the extended deadline. This year, however, in 2022, for the tax year 2021, you have until April 18th for most of the country and April 19th for the folks living in Maine or Massachusetts to actually make their contributions for year 2021, their HSA contributions for year 2021 until this year, until those dates, April 18th for rest of the country and April 19th for Maine and Massachusetts. So hopefully that clarifies. We have this also as a post on Savings Oak that actually links to the IRS clarification around this. And I hope everybody finds this useful and leverages it. If you still haven't made enough contributions or didn't max out for last year, something totally you should do that. And while you do it, please remember, you can invest those dollars. So they're not just sitting in cash. Figure out the best opportunity that you have available to go invest those dollars and make those dollars work for you in the long run.
Okay, you heard him. All great advice. So with that, we have wrapped up another edition of The Right Way to HSA. I want to thank everyone for tuning in. We are here every week on Wednesdays at 12 p.m. on LinkedIn and Twitter. If you have any questions, please feel free to go to our website at savingsoak.com and click on the Contact Us button. Ask us your questions, and one of our HSA specialists will get right back to you. Thank you so much.
Awesome. Thank you. Bye, everyone.
Bye.